Hi everyone, this is Mrs. V Chen. Welcome to my Form 4 Accounting lesson number 12. And today is 5th April 2020. Today's topic is about depreciation. And here is the example. Okay, let's say this is the first year we have our business. And then on 1st of January, so we need this motor van to deliver goods to the customer. And then we bought this motor van and paying check by this amounts, and then we are going to use the motor van for 10 years. Okay, so what is the double entry for this? So since we pay by check, therefore we will have less money in the bank, so therefore we credit bank, right? Okay, and now we have motor van, so we debit motor van accounts. So by the money we pay, which is 100,000 and 100,000. Okay, and this motor van is a kind of non-current assets in the statement of financial position. Okay, so what happened after we have used the motor van for a year? Therefore, at the end of year 1, so the value of motor van going down, therefore we need to provide depreciation. This is a double entry for depreciation. We debit depreciation, and then this will be in the profit and loss account on debit side. So what do you think about depreciation? Depreciation is a kind of expense in the income statements. And then this credit accumulated depreciation, and then I will explain this accumulated depreciation account to you later. Okay, and look at the amounts. So in the first year, the value going down by 1/10. So because we're going to use it for 10 years. So the value going down by 1/10, which is 10,000. Okay, so after double entry, we are going to do posting in this depreciation account and the accumulated depreciation account. So let's go back to what we have here. So we debit depreciation and then credit accumulated depreciation, so that we always provide depreciation at the end of financial year, so that this is debit depreciation, right? And the date is 31st December in year 1. And what makes us debit depreciation is because of accumulated depreciation like that. Okay, and after that, this is 31st December, and then I credit my accumulated depreciation account by 10,000, and the reason is depreciation. Okay, and the next, I need to tell you this: depreciation account is a nominal account, and this one is a real account. Now this is important. Okay, this is account. Okay, so therefore it is nominal accounts. That means we are not going to have any closing balance. Okay, so where to go, where to close in that case? So this is 31st December. Then we are going to close it to the profits and loss account. So here, if I have my profit and loss account, so this 10,000 will be on debit side in the profit or loss account, or this account of expenses in the income statements. So here I have depreciation. Okay, so this is the treatment for nominal accounts. Okay, so this is the nominal accounts for depreciation. Okay, and then what about accumulated depreciation, which is the real accounts? So let me highlight that. This is a real account. So if it is real accounts, that means we will have closing balance here. So this is 10,000. So this is 10,000. Okay, and the date is 31st December. Since this is real, so I'm going to put this carry down to year 2. All right, so this closing balance in year 1 will be opening balance in year 2. And also, since this is real account, therefore we need to put this in the statement of financial position. And also, this is a credit item. And motor van, and how much is the motor van at the beginning? Which is 100,000. So therefore here, less accumulated depreciation, since this is real accounts. So, and this is a credit balance, this is a debit balance. If you put them together, so it will be deducted from 100,000. So I have 10,000 here. Therefore, how much is 100,000 minus 10,000? I will have 90,000. So we call this as net book value. Okay, so therefore you can see after we use the motor van for a year, the value going down to 90,000, and then we call this 90,000 as net book value. And here we have the formula of net book value, which is equal to costs. So how much is the cost of motor van, which is 100,000, and then costs also same as the purchase price, and then costs minus accumulated depreciation, and here we have the formula of net book value. Okay, now we come to year 2. We don't need to buy another motor van, but however, at the end of year 2, we need to provide depreciation to show the value of motor van going down further. Here, the same double entry we had before. So debit depreciation, 10,000, because the value going down by 1/10 in the second year, and then we credit accumulated depreciation accounts. All right, and then remember which one with opening balance. So this one, accumulated depreciation, because this is a real account, so that this is year 2. This is year 2 to begin with. So that is on 1st of January. I have the opening balance from last year, because last year I have this in year 1. This is the closing balance in year 1 will be my opening balance in year 2. So I start with this 100,000. Now posting, so debit depreciation. So this is 10,000 goes to debit side. And this is year 2, this is year 2. And then we always provide depreciation at the end of the financial year. And the reason is accumulated depreciation here. Okay, so I debit depreciation, and then I credit accumulated depreciation to provide depreciation at the end of December 31st. Okay, I have another 10,000 here, and this is because of depreciation. Is that right? Okay, so since depreciation is nominal accounts, so therefore where to close this? So 31st December to close this to the profits and loss account. So therefore in my income statements here, 10,000 on debit side, I have my depreciation. Okay, and since accumulated depreciation is real, so how do I close? Therefore altogether I have 20,000. Here is 20,000, right? And therefore I have 20,000 here. And then to close it, so the last day is 31st of December. I have balance carry down. So this closing balance in year 2 will be opening balance in year 1. So finally, motor van, okay, which is 100,000. So this is the costs, and costs is also the purchase price, and less accumulated depreciation. And now I have 20,000. So that how much is net book value in year 2? So therefore my net book value in year 2 becomes 80,000. Okay, so this is how we provide depreciation, and you can see costs is always the same, and then we have this accumulated depreciation getting bigger, and then net book value getting smaller in year 2. Okay, now we come to year 3. We do the same thing. We always provide depreciation at the end of the financial year, and the double entry is debit depreciation 10,000, so the value going down by 1/10 in year 3 as well, and then we credit accumulated depreciation. And this accumulated depreciation, now we are now in year 3, so that year 3, since this is real accounts, so we have opening balance, so balance brought down from last year, year 2, so we have 20,000 to begin with, and now the posting is same as before. So year 3, so I have 10,000 here. We always provide depreciation at the end, and the reason is accumulated depreciation, and this one is nominal, so we close it to the profits and loss account. So therefore in the income statements I have 10,000 on debit side. Okay, and this is depreciation, and also since this is I haven't done the posting. So I have this, okay, 10,000 because of this double entry. So debit depreciation and credit accumulated depreciation, and we do that at the end of financial year because of depreciation. So therefore I have altogether, so how much is closing balance in year 3? So that will be 30,000. So close it 31st December, balance carry down. Okay, now finally the motor van, which is the costs, always the same, 100,000, which is the purchase price, and then minus I have 30,000 here. Okay, and finally how much is net book value? Going down further to 70,000. Okay, so next we jump to year 8, and then also at the end we need to provide depreciation to show the value decreased by another 1/10, so which is same as debit depreciation and credit accumulated depreciation, same as before. So here I have my posting, and depreciation is a nominal account, so that I have another 10,000 expense in the income statement. However, if you look at accumulated depreciation, since this is year 8, so what do you think about the opening balance? This opening balance will be closing balance in year 7, since we jump and then we don't have enough information. We don't have information for that, so that we have to calculate this. So, and then how do we calculate that? So remember how much is the cost? The cost is 100,000. Is that right? And each year the value going down by 1/10, so 1/10. Okay, and this is the beginning of year 8, which is same as the closing of year 7. So that means we have used this for 7 years. Okay, so this is the formula to work out the opening balance in the accumulated depreciation account. So therefore I will have this 70,000 to begin with. Okay, all right, so and each year we provide 10,000, so that I have 80,000 here, and then I have 80,000 here. Okay, and this is also 80,000. And finally, in the statement of financial position, this is the costs of motor van, always the same. However, accumulated depreciation going up to 80,000. Right, and how much is net book value in A8? And that will be 20,000. All right, so here we have the formula to calculate accumulated depreciation. Okay, so finally in year 10, and then at the end of year 10, we also do the same thing to provide depreciation. So here is all the posting, and depreciation account is nominal account, so we close to profit and loss here. Okay, so again, I have this depreciation 10,000 as one of the expenses in the income statement. And now we come to accumulated depreciation. This is year 10. So how much will be the opening balance? So the calculation will be my costs is 100,000, and then each year going down by 1/10, and we have used it for 9 years. Okay, so therefore I will have 90,000. Okay, so in year 10, increased by accumulated depreciation, increased by another 10,000. So the reason is depreciation account here. So I have finally 100,000, 100,000, right? So here is also 100,000, and to close it at the end, so this is balance carry down. Therefore, the costs of motor van, which is always the same, the purchase price, and how much I have to deduct motor van here because of accumulated depreciation, which is also 100,000. So you can see net book value is equal to 0. So we have a name for that. We call that being, so the motor van being fully depreciated. So when we have non-current assets being fully depreciated, that means we have net book value equals to 0. Therefore, when we have net book value equals to 0, that means we say that the non-current asset is being fully depreciated, and the value of accumulated depreciation will be exactly same as the costs. Okay, so therefore, what is definition of depreciation? So you go back to the first page. So we have depreciation, which is a systematic allocation of the costs of a tangible non-current asset over its useful life. So if you refer to your textbook on page 61, you will have depreciation, the meaning of depreciation, which is also parts of the costs of non-current assets being consumed. Okay, and also we have this formula for net book value, which is equal to costs, and cost is always the same because it is the purchase price and minus accumulated depreciation. And why it is called accumulated depreciation, you can see this account is getting bigger, and this is always the same, so that we have net book value getting smaller, and smaller. All right, so this is about the idea of depreciation. Thank you for watching my video. I'll see you next time. Bye bye.